Hey guys, welcome back. Hope you had a good weekend. It's May 2nd. Another week starting with volatility. SPY, big moves. GameStop, big moves. Options, I think we did like 1200 or something in realized gains today. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us on at HappyMoneyYT, as well as a Discord server. Link for that's in the description, as well as the Twitter. Ryan Cohen tweeting about drunken sailors. Yeah, coming off of the biggest red day the S&P has seen since COVID crash, which was Friday, down, what was it, 4%, 3.63. And yeah, that was the biggest day since COVID, which I thought it was. I said it on Friday. I'm like, I haven't checked, but I think this was. We had bigger intraday moves with biggest down day. And coming in today, SPY was weak. I was surprised how weak it was. Market's actually now closed. It was a little later today. But yeah, SPY melted off today for most of the day and caught support at 405 for a bounce basically back to close. Let's see. I guess it closed up 0.5%. Which for years, over a year, that would have been an average to even a little above average day. All these tiny candle days. This whole time, 0.5% was average, maybe even a little bit more than average. But with these big moves, we're getting 1.5%, 2%, 3%. Yeah, 0.6%, and the 0.6% all happened in the last 30 minutes? No, 20 minutes. So pretty crazy volatility. These are signs of instability, money flowing around, market basically getting ready to crash. And I think right now it's waiting on Powell. I thought it'd actually hold up better than this before Powell, so it just kind of shows, I think, how skittish the money is, how weak the market is. But that being said, I mean, I guess we did close up 0.5% today. And on the hourly here, that big green engulfing candle, I would say we have a little rally tomorrow, and then waiting for Powell on Wednesday. And I don't know, market could rally after Powell. This was last time we had a melt, kind of a correction into Powell. He was here, and we had that epic rally. The bear market rallies are some of the most aggressive ones, because that's when sometimes short squeezes happen, where it's just there's so much selling pressure, then you just find the buyers, and it just flips and it goes quick the other way. So that's kind of what actually the Volkswagen short squeeze, it was in basically the 2008, the height of the crash. It was at the bottom, and it basically came out of a bear market rally, if you think about it. So at some point, I don't think it's going to happen next couple weeks, but at some point our GME squeeze could be from a bear market bounce rally where it just keeps going. So here's some bear market rallies from the last so here's the 2008 crash, was basically right here. It started correcting for like a year or two, and then the biggest correction was right here, and this was when Volkswagen squeezed right at the bottom there on that bear market rally, where it bounced 15% in 4 days, which is huge. This is just more of a grind up. It's not really a rally. I think these are big bounces, 24%. It's 46 days. This was the biggest one though. So Volkswagen, I think, was actually on that. Yeah, it was right in October. So it just took that and kept going. So that's just got squeezed out. I kind of expect GME to squeeze in a similar format, if it's not forced from them having to recall shares or something like that. If it's somewhat natural like Volkswagen, it will be on something like a market like this, probably, where it's shorts covering on this bear market bounce. So yeah, I think we could get one of those this week, towards the end of the week probably, if anything, Thursday, Friday, and then into next week. We'll see though. Powell could also make it sell off. I don't see that happening, but yeah, I see it rallying from that. Tomorrow, maybe some more volatility, but I don't expect a big move up or down, I guess, as far as percentage wise from today's close, somewhere in this range. I did get some bullish plays setting up. I did have some bearish ones. I closed them out today after we kind of found a bottom, and I flipped to more bullish stuff. Such a volatile market, I'm finding it better to just be more quick, scalp almost just in and out and not holding it, because the long-term move here, yeah, you can do that, but it's the moves are big enough to where you can just catch it to here and then wait for it and then catch it again, and then if it starts to show resistance or support, just close it, even ride it on the rally if you want. But yeah, so I haven't played a whole lot of these bigger moves, at least on SPY, I guess, but this one would have been a pretty easy one to catch a whole one if you had enough time. But you know, it's these big moves day to day, you can just kind of scalp it almost. It seems better because if it flips, it'll flip quick in the wrong direction, and then you can roll over. If I were to do it, I'd be doing bearish plays and I could roll them over, which is what I typically do. And I'm like, why roll it over if I know it's going to go up and then come back down? I'll just close it now, take that little bit of profit and just put it into a bigger downward play once it's hit a high. Yeah, just a little bit more active trading, I guess, style. GameStop had a big day down, outpaced SPY almost 10%. It's like 0.5% from 10%. Hourly flip bearish. We've got bearish MACD right under the 9. Just perfect little staircase down. Big engulfing candle though on this SPY bounce. GME also found it with volume picking up. So this to me looks like a nice little support and probably rally with the market as well. When we were trading flat here and we're still bullish on the MACD, I was thinking we could have a little rally to 135, maybe 140. Now that we broke that low and we're actually low on the year now. We're not on the year, sorry, but low on this little rally. SPY is actually low on the year. It broke its yearly low right here. Broke that today. So GME outpacing SPY, right? No, because we ended the year high. Okay. Anyways, yeah, I think GameStop could have a little rally, little bounce. We've got this engulfing candle. I think SPY is gonna have a little rally with PAL. We'll see how high up GameStop goes. Might just find resistance at this 130, 132 area. Maybe 135 still on the table before some consolidation and back down. That looks something like, yeah, it'd be a pretty big rally. Kind of similar to something like this. You know, big down days, and you should have this little relief rally of sorts, consolidation, more down. Sort of like this. Relief rally, consolidation, and more down. We've kind of had that. So if you wanted to find a chart that looked like where we're at, I'd say it's probably similar to here. We're probably in... I mean, we could even be in this range down here, where this was the low, and we'll just grind and then make new highs. Well, this was actually the second low. This is that little trough period. I think we're before this though. So I think we're probably closer to like this, or even this little relief rally area. So a little relief rally, and then timing, trying to get close to the top for some bearish plays, and you can make more money on the way down the GME because it's easier to predict. It goes on for longer periods of time. It's just gotta play it right. Call credit spreads I like. Selling covered calls is nice. There is the risk of overnight of holding if there's news or something comes out. So those may be better to close. I'd do kind of both. But yeah, I think after when we get a bounce, we'll see if it's 135. We'll see how high it comes up, and if it starts to kind of teeter and flatten out, I'm gonna expect more downward, unless if the MACD and our candlesticks show bullish reversal where it's green. If not, then I'm going to open some more call credit spreads at the money, some bigger ones. I've got some buying power now from just covered calls and kind of taking profits, I guess. And yeah, I mean, the covered calls do pretty well. I'm selling them at the money once my indicators go. It doesn't always work. Sometimes you blow it up a little bit. It's pretty easy on these days where it's just grinding down. It's easy to stay in them. Actually, I did them twice today. I opened them up. Let's see, where were we? Yeah. So I wanted to open up here, and I was like, oh wait, we had this bounce. I actually opened it up right here. Was down a little bit on it, didn't watch it, didn't want to see it, and then I was positive, making good. And then I think by here it was up like 40%, which was, or not 40, maybe 30. It's like $600 or $700. closed it out. Didn't really see a reversal, but I just wanted to take some profits in case it just ripped. And then opened up another one actually here. I was like, I guess we'll just keep going. Open up another one here. Close this one out right here. Made another like 400 bucks on that one. So the best would have been just hold it through the whole thing, but I wanted to lock in some profits. And I actually tried to get calls right here. We had bullish MACD, we had green over the 9. This was an easy day to trade if you were following the indicators I follow. I didn't get filled, and I was like, that's fine. The spreads on GME suck, really, so it really sucks to trade. When I see it like this, doing this, I'm like, well, the SPY is doing the same thing. You just do it on the SPY with liquidity. And GME will be that way sometime soon after the split, but for now, it's big spreads, but it's not going to move like this after the split. It can still move big, but with more shares out there, it's going to be a slower mover. And that's a good thing for long-term and investors and institutions. They don't want something volatile. They want something more stable. So I haven't really talked about the effects of a split, but that's one effect, is it will cause the stock to move slower. Not to say it can't go crazy. I mean, look at something like Tesla. I don't even know what their float is, but it can move still big, but not insane. So I expect a little rally next couple days and see where it peters out. Here's our trading. I closed my Berkshire Hathaway B puts. I think we did like 400 or 500 bucks on that one, realized. They didn't retire, Munger didn't retire, Buffett didn't retire, but we were up on it. It's nice downside market exposure. Here's the calls. I sold 125s. Those were at the money. Closed my Apple put. It was up, and it wasn't up much, but I thought we might bounce, and then I timed that a little early. No worries. Attra actually opened up another one, and this is a weekly, so we'll see. That one looks like it's starting to break out. VIX, I opened up another put. So there's upside exposure to SPY, basically. So if SPY does kind of rally, this should do all right. Tesla, I closed my call credit spread and opened up. This is the call credit spread I closed. And then I opened up a put credit spread. Oh, another call credit spread? No, maybe I just have downside on Tesla, actually. Yeah, I had an order for a put credit spread, but it never filled, I think. So I have downside on Tesla, which is fine. I'll just average into it or roll it if it's in the money by expiration, if we do get a rally. Yang, I closed those bullish put credit spreads. They were up. Here's the GME, some scalping again. 125s, bought to cover. And then I moved down to the 123s. And then did I open up? And then there's the Tesla. Then opened up a put credit spread on SPY, bullish play. So 411, 412. SPY's got to be above 412 by Friday. Here's our VIX put. Birds is up today. Ultimate hedge, 3%. SoFi and Wish are both up. Kind of these small caps having a bit of a rally today. I didn't check run. Rocket up also, weird. Yeah, so kind of just took profits today, more or less. Got 4,300 in buying power. I think some of that. No, yeah, that's legit. So done all right. I guess I'm just kind of a bear. Hopefully I can do this when we're in a bull market again in a year or two. But for now, it's definitely downside. I wouldn't open up downside necessarily tomorrow unless it's a big bounce and you're willing to hold it through some more ups. But yeah, getting exposure to the downside will treat you well. Oh man, the DD that came out this weekend was legit. Got to jump on our Discord. I've shared it in here. Some of it's just kind of an overview of the collected data that that's been done, and it's just nice to see it and updated. The bigger short, VW short squeeze. This one is amazing. This just goes over the comparisons with VW and everything that's going on during that time and what's going on now, and actually some of the theory about Volkswagen actually kind of causing that crash, which I've heard one of you guys in my YouTube chat actually saying that, and I'd never heard that, and I thought that was crazy. And now I'm seeing it more, where there's some theories about the housing market was causing it, kind of the overall market coming down, but the actual crash was liquidation and basically from that short squeeze. So it's kind of interesting because it did happen at a similar time. So Wu-Tang album, we're getting it 100%. That DD says. This real estate 2022 real estate crash collapse DD is a good read. This is by Cat Bully's Dog. It's about mortgage-backed securities and commercial mortgage-backed securities. Lots of cool graphs to look at. This is, yeah. So as you know, I had 2 houses. I'd sold one, and then I sold another one to buy more GME, and I've not bought back into real estate, just invested into GME for this point. I see it as the inverse in the hedge for a market crash, and I see a housing crash coming, at least a correction. So I'm waiting for real estate exposure, probably after GME squeezes. Lots today. Hope you guys had a good weekend. We'll see you tomorrow. See you on Discord. Peace out.